So 3 years ago in May 2019, I bought my first share, and now 3 years later, I made multiple millions. I can now buy my dream car, I live in a dream house, and I never have to work again in my life. I'm sorry, but I don't think this is my script. Can we change it up? So no, this wasn't my story. This isn't a flashy story about how I went from 0 to a million trading stocks in 3 years or whatever. No, the reality is that I invested a bit more than 200,000 euros in stocks and crypto spread out over 3 years. And instead of seeing my money pile grow, I see it shrink. So although these times aren't the best, I still have a total paper profit of 17,000 euros. So my total profit for my stock portfolio currently sits at 22,000 euros and my crypto portfolio sits at about a 5,000 euros loss. If you're new to my channel, welcome. My name is Robin and I live in the Netherlands, own an e-commerce store, and probably similar to you, I also aim to reach financial independence someday in the far future. So as of now, my total net worth sits at around 240,000 euros. So you can see it in this graph. So the red lines are from this year, 2022, and then the blue lines are from 21. So as you can see, we are now at July. So we are at 240,000 euros. So at the beginning of this year, I had around 300,000 euros. And the reason it went down pretty badly is because I had a hefty tax bill of around 40,000 euros I needed to pay for the income I made in 2020. And obviously my stock portfolio and my crypto portfolio went downhill as well. So that's also the reason why my net worth went down as well. And what is also pretty nice to know is that I have 15% in cash. So as you can see over here, we're July in cash. So 15% in cash and 85% investments. So investments in stocks and crypto. So, and that was basically my goal last year. So having most of my money invested. So for example, last year around this same time, I had 60%, so 59, around 60% invested in stocks and crypto and 41% in cash. As you can see, I invested most of the money right now, so I only have 15% in cash and 85% invested. As you can see in my cash graph, you can see here in January, I had 77,000 euros still. And then suddenly in February, it was only 30,000 euros. And it was because that hefty tax bill of my income of 2020. So my portfolio is 91% stocks and 9% crypto. So I don't own any fancy stocks. I don't have any fancy investment strategy either. So the strategy I follow for investing is the dollar cost averaging strategy. So you can Google it. But in a nutshell, it means that you invest a portion of your income every single month. So I did read many books on investing and took multiple value investing courses, but I still decided that this strategy was best for me. So looking at my investment portfolio, I have 50% of my money invested in the S&P 500 ETF. So that is the blue one. Then you can see the red one, that is the All World ETF. So I have 39% in the All World ETF. And then I have another ETF, which is the Emerging Markets ETF. And as you can see, that hovers around the 2 to 3% mark. It is the yellow line, as you can see. So then the green color is Bitcoin. So and as you can see, for example, at the beginning of this year, it was 13%. And that was because obviously Bitcoin had a higher price back then than it does have now. So now it went down to 8%. I didn't sell anything just because of the price of Bitcoin. And then we also have the orange line, as you can see over here, which is Ethereum, which is the second largest crypto coin. So in the beginning of this year, I had 3% and now it's only 1%. And that is also because the price of Ethereum went down as well. So this is also fun to know. So how much do I have invested in crypto of my total net worth, or in stocks or in cash? Over here, you can see the percentages, and over here you can see the months of this year. So as of now, I have 15% in cash, as you can see over here at this line. So I have 77% in stocks of my total net worth and 8% in crypto of my total net worth. So this is my investment account. So I have two different investment accounts. So this is my regular investment account. And as you can see, this is the All World ETF. So the Vanguard All World ETF. So of this ETF, I have 741 shares at a price at this moment of 99 euros. And the total value right now sits at 73,000 euros. And my average purchase price of this ETF was 102 euros. So that basically means I have a 2.5% loss. So close to 1900 euros in loss for this particular ETF. Then I also have the emerging markets ETF, as you can see over here. Of this ETF, I have 106 shares. So here you can see I also have a pretty hefty loss here as well, so close to 9%. But luckily, I didn't invest that much money into this ETF. Then I also have the S&P 500 ETF. Of this ETF, I have 1,484 shares of a total value of 109,000 euros. With this ETF, I'm 27% in the plus with a total profit of 23,000 euros. So if you combine all those numbers, including all the dividends, I have a total profit of 24,000 euros in this particular account. So then I also have my retirement account, which is this account, which has a balance of a little bit more than 10,000 euros. And in this account, I own the All World ETF as well. So that's the only ETF I own in this particular account. So I have 110 shares of this particular ETF. And I bought these 110 shares back in November last year. So my total loss in this particular account sits at close to 8%. So then if we have a look at my income of the last couple of months, so last quarter, so that's the months April, May, and June, my e-commerce store made close to 11,000 euros in profit. So dividing that by those 3 months, I end up with around 3,500 euros per month in profit. So you can see it in this graph over here. So the June income was a little bit lower in comparison to other months. So my current income isn't as high as I would like it to be. So I'm currently working on a new business that I started at the beginning of this year. So I'm fortunate enough that my current e-commerce store doesn't cost me that much time to maintain. And for the ones that don't know, this is my e-commerce store. So I sell these 4 books. So in the Netherlands, I sell them on my Dutch e-commerce Shopify store, but I also translated them to English. So they are available on Amazon.com as well. So here you can see my profile on Amazon.com. So this is my new project. So it's called CreatorAct.com, where I review marketing software and in particular at the moment, email marketing software. So I also have a YouTube channel with it where I make tutorials, email marketing tutorials. So email marketing was always a big driver inside my business. And furthermore, marketing is my background as well. I have a bachelor's degree in marketing. So yeah, email marketing is pretty much second nature to me. So yeah, this is where I spend most of my time nowadays, building this new project. So the reason I want to earn more is because I would like to see myself building my dream house one day. So for that, I need a higher income. Also, as of now, I don't have any more money to invest, as you just saw in the graphs I showed you, because I invested the majority of it. So to start investing again, I need to either live more frugally than I do now or make more money. So I choose the latter because I feel I don't want to live more frugally than I already do. I like to take trips, to go on vacations, and so forth. And what is more, let's say if I didn't invest any more money up until this point, so if we use this calculator over here, so this website, so as you just saw at the moment, I'm around the $200,000 mark in my investments. But let's say if I didn't invest any more money up until this point, so at the moment I have around $200,000 or euros invested. So let's say after 30 years with a return rate, an annual return rate of 6%, without any additional contributions, I still end up with $1.1 million if we have a 6% return rate. So if the return rate will be greater than 6%, let's say 8%, it will be 2 million. And just so you know, the S&P 500, where I have the majority of my money in, I think it had a return rate of close to 8 to 10% annually over the last 30 years. And this is also called Coasting FI. So if you search Coasting or Coast FI in Google, so you get plenty of websites that explain the concept, but in a nutshell, so Coast FI means that instead of continuing to save for retirement, you could potentially coast because the heavy lifting has been done already. So if you invest the majority of your money in the beginning of your investing journey, then you can coast the rest of it. That's the idea. So you could reduce your saving rate and still hit your FI goal at the end. So if you like these little updates, please let me know. You can either click the thumbs up button or leave a comment down below.